Welcome to what turns out to be another disappointing insight into the employment picture. Kathleen Madigan is here to break it down for us. And Kathleen, we had a couple of good months to start the year, and now all of a sudden the trajectory is less.
ADP said today that only 119,000 jobs, private sector jobs, were created in April, and well below the 175,000 we were expecting. But you know, even ADP, Joel Prakken, the chairman of Macroeconomic Advisors that puts together the ADP numbers, cautioned that this isn't a sign that the economy or the recovery is running out of steam. You know, the mild winter helped hiring earlier in the year, and so they expected some payback in March and in April. So he said, you know, if we continue to get a few more months, then that's going to be a problem. You know, and what his big point though he made in the conference call that he had is that, you know, 119, even 175,000, that's not strong enough job gains to materially bring down the unemployment rate.
Because we need something on the order of 300,000 job gains a month in order to really get those that unemployment rate well below the 8% reading.
Right, right, and you know, and especially because as macroeconomic advisors expect, and most economists expect, we have a very low labor force participation rate. There's a lot of adults who aren't even looking for work. And those people are going to come back in once the economy picks up, and once they get back in, that's going to tend to lift the unemployment rate.
Well, we're going to, you know, not be able to take those unemployment readings. I mean, even last month when we got the non-farm payrolls number, the unemployment number itself didn't look all that bad, but mostly reflected the fact that so many people have effectively, you know, excluded themselves from the workforce.
Right, exactly, and according to our definition of unemployment, you have to be actively looking for a job in order to be considered unemployed. If you go to school to get better training, or you just stop looking, you're considered out of the labor force.
Got it. Now, we've been talking about, you know, look, the warm weather certainly pulled some jobs into the January-February time frame.
Right.
So is this a blip? I mean, are we going to resume a trajectory where a better economic outlook starts to create jobs once we move a little deeper into, you know, May or June?
Yeah, that's what Joel Prakken said, and it's also my view of the economy. Unlike last year, where the economy slowed down, but a lot of it was related to the Japanese disasters. You know, the economy, the fundamentals of the economy are in much better shape in 2012 than they were in the preceding 2 or 3 years. And so, barring a shock, and you know, Eurozone is right over there, hanging over us.
Sure.
I think that we will get back to that, like 200,000. But again, that's not great, especially coming out of such a severe recession.
Well, and you know, everybody always argues that, you know, the employment picture is a lagging indicator. It comes late in the recovery.
Right.
It's not something that's going to be, you know, a leading indicator of you know, a bounce back here. But if we look at where the markets are today, obviously we're reacting pessimistically to exactly what's going on. The Dow down about 75 points here, 72 points right now. Not a big sell-off, but basically giving up the gains we saw yesterday. The S&P down about 10 points here right now. So clearly some disappointment in the market to these figures.
Although flip that around, you know, now apparently the whisper numbers for Friday's number are coming down. And so if you lower those expectations, if we get, say, 150,000 on Friday, which would be below expectations, the markets might actually welcome that.
All right.